Hey guys, welcome back to Easy Mortgages. It's your guy Ezequiel, here to make mortgages simple and easy for you to understand. In today's video, I'm going to be teaching you guys how to improve your credit score really fast and how that relates to your mortgage. So if you guys want to find that out, make sure you watch it all the way through the end, and I'm going to be teaching you guys more information. Now before we begin, you should understand just a little bit about how the scoring system works when you get a credit score. So it's all based off the Fico scores, and I'll include a little attachment of what it looks like. So the Fico score is based off of these 5 factors, and there's different percentages for how much it affects your credit score. The first one is worth 35%, and that's if you make on-time payments. That's pretty self-explanatory. If you pay late, it affects it negatively. If you pay on time, it affects it positively. Now the second one is worth 30%, and it's called Credit Utilization, and I'll explain it a little more when we actually dive into this video. It's basically what percentage of the credit limit are you using, and how often do you use it, how many transactions you have, and if you max out all the time or don't. Third category is worth 15%, and that's the age of your credit card. So how long have you had a credit card? Have you had it for 1 year, 2 years, 3 years? Then 10% is off of the types of credit you have. So this can include the different types of loans you've used to pay off with a credit card, like car loans, home loans, even other small loans. And it just shows if you're able to make loans before. Are you more trustworthy to pay off a loan using a credit card than someone who just started a new credit card and has never paid a loan? So anyways, the last category is hard inquiries, and that's anytime you get new credit. Anytime you get a new credit card, you're asking for more money, so it could just look as a cautionary thing, but it will hurt your score just a little bit. So nothing to fret, but just know that it does affect your credit score. So now that you know how the Fico scoring system works, I'm going to give you 5 tips on how you can improve your credit score. So the first thing you want to do is get an authorized credit user. Now, authorized user could be anyone you know, usually a friend or a family member, that basically agrees to share their credit history with yours. And so it basically reflects whatever their history is. You get to share a portion of that, and can usually boost your score. It only hurts you if they don't have a good score or they have about the same score as you. And you usually want to get someone that has a good score around 740 or above, because anything less than that is just going to either keep your credit score the same or it can hurt you. You also want to make sure they don't have any late payments or very few, because that also reflects your score, because whatever their history is, you're sharing that. So if they have a bad history, you're going to have a bad history too. So basically, you're getting someone to keep you accountable for your credit score and your credit report. So if you have someone with good history, chances are you're going to develop good history too with yours. So it's a great way to boost your credit really quick. So the second thing you want to do is work on your credit utilization. And I call this the 10% rule. The 10% rule is whenever your balance is below or at 10% of your credit limit, you can improve your credit score dramatically, and usually at a faster pace than anything above a 10% balance. And what you can do to help with this is basically set up auto pay. Every time you make a purchase, you should just have it automatically pay it, and that way you don't have to worry about your balance going above that 10%, and it will usually boost your score pretty soon. Now some of you might be thinking, well, that's kind of hard to do, because it's like I just have too much debt to pay down to get it under 10%. And you're like, I don't want to pay off a couple $100 in one card when I have so many other cards that you have to do. And that's understandable, and there's other ways around this. And the biggest way around this is in the third step you can do, is increase your credit limit. So you want to increase your credit limit so that way your threshold of 10% can actually go down. So let's say you had $500, you increase your limit to $1,000. You basically have double the limit. Now you can pay up to $100 a month. So that just gives you more flexibility and room to make purchases. And most of the times, if you just call your company, if you've been there for a year, and ask if you can increase your limit, they'll say yes, unless you've been having late payments or just a really bad history. Now the fourth thing you want to do is get more credit cards. Like I said before, if you can increase your credit limit, that just gives you more opportunities to spend more, and you can also limit it to that 10%. But if you still can't work your way around that, if you get more credit cards, Well, if you spend 10% in, let's say, 5 cards and they're all capped at $1,000, that's an additional $500 that you can spend. It also looks good when you're paying off multiple cards versus one, because credit companies like to see, oh, if he can maintain 3 cards versus someone with 1, it just makes you look like you have more credit history reliability than someone else, and it improves your score. You can also try getting smaller loans, or even like paying off a car loan with these credit cards and just paying off a little bit at a time to prove that you're more diverse with how you use your credit cards. It looks better for someone who's able to pay off a car loan with a credit card than someone who's just made smaller purchases or grocery store purchases with a credit card. Now, the last thing you want to do, which just kind of goes without saying, is always pay your cards off on time. And anytime you make a late payment, it really hurts your score. So if you can avoid doing that and just pay cards on time, it's going to boost your score. A bonus tip. This is more of a general rule, but never apply for a new credit card when you're about to get a loan, or you know you're going to get a loan, because it stops as a hard inquiry. As a mortgage originator myself, I know this doesn't stop the loan completely if we can prove you don't open up more debt with it. So if you do get a new card, we're going to see it on the credit report. But as long as you don't open up new debt with it and can verify that and just give us a statement of that new account and show that it's like even at 0-0, then you have a better chance at qualifying than someone who just opens up a new card, we see that, and they don't tell us that you have more debt on it, then you're probably going to get denied the loan, because that's a lot of money that can change the ratios of your debt to income ratio, and you might not qualify. So like I said, these are just some quick ways to help you guys boost your credit score, and you should start seeing results within the next few months. If you're doing all these things, you should even see it in the next month. If you have any more questions or mortgage related concepts that you would like understanding, please message me or leave it in the comments down below. I'm a mortgage loan originator myself, and I would love to help you guys with your loan or work through anything you're struggling with understanding. And if you guys are even looking at getting in the pre-approval process or want help with that, please message me today, because I would love to work with you and help you guys move on the next steps, so that way you can get the house that you want. All right, take care, guys.